Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday, the 21st of June 2021, and we're looking at gold and silver prices, together with some other financial data and general news headlines. We see gold and silver are up first thing. The weather outside is windy, to say the least. But is this the type of market we'll be expecting today? Let's take a look. Well, welcome to our Monday morning update. We're going to run through this hopefully quite quickly, looking at Bloomberg. The time currently is 10:30 GMT +1. And headlines: ex-Morgan Stanley traders turn crypto startup into unicorn. It's quite an interesting article there for those following cryptocurrencies. US futures rise as stocks pare losses and oil gains. Half of London firms plan for home working 5 days a week, and we suspect this will continue across countries throughout the world. Sweden sinks into political chaos as PM ousted in a key vote, and Europe's air traffic reaches 50% of 2019 as recovery continues. Good news. What we wanted to perhaps have a quick look at here on Bloomberg, Michael Burry warns retail traders about the mother of all crashes. And if we look at that just very, very briefly, the fund manager of Big Short fame issued a stark series of tweets about cryptos and meme stocks. Michael Burry, who became a household name after his winning bet against mortgages was featured in The Big Short, issued a series of tweets on Thursday warning individual investors about losses the size of countries in the event of crypto and meme stock declines. All hype speculation is drawing in retail before the mother of all crashes, Barry wrote on Twitter before the posts were deleted. When crypto falls from trillions or meme stocks fall from tens of billions, Main Street losses will approach the size of countries. History ain't changed. And basically, we would agree with him. And I think those who have followed this channel and those interested in gold and silver will know that the same applies to precious metals too. It shouldn't, because it's a wonderful hedge. But we've seen precious metals rocket sky high, particularly when the retail trade, that's the normal man or woman in the street, thinks that it's a slam dunk guaranteed bet to enormous profits. When they start to get in, you see prices rise dramatically, and eventually there is only one direction in which they will go. Now, we all know over the long term, taking 10 years plus, it's very unlikely that you will purchase a precious metal, and arguably many equities too, or at the moment cryptocurrencies, but that's just might be a temporary blip. Very rare will a 10-year period give you a loss. The only exception, of course, is at the moment silver in the 2011 peak at $50. And that eventually will correct itself. So here we go. Michael Burry predicting a crash anytime soon. Looking on BBC News, in the UK, US warship, well, it's not UK, US warship tested with £40,000 explosive. Macron and Le Pen suffer election setbacks. Have a quick look if there's anything we want to particularly draw attention to. Can't really see. The schools where dozens died in NHS blood scandal. First transgender athlete picked for Olympics. Hundreds attend Stonehenge solstice against advice. And looking to America, bit of bad news. Storm hit Alabama. Actually, very little that would strike one. Jim, my surprise, claimed to be Joe Biden's English cousin. Very little really when we go through this. Let's have a quick glance at business in case there is anything spiking up. Morrison's share price soars 30% on takeover offer. Interesting seeing this about newspapers. Last week we read that Rupert Murdoch regards that his newspaper, The Sun, is worth nothing. Such is the take-up of people buying newspapers today. So again, nothing really coming out here. Australia escalates its wine dispute with China. Nothing that's going to particularly move stuff today. Let's have a look at what stocks are doing. Now, we reported on our weekly update on Saturday that we had the Dow Jones fall 533 points on the Friday, but we're still quite healthy over the year, up 28%. The S&P up 34 and the Nasdaq up 41. But looking at trading today in Europe, Middle East and Africa, got the Euro Stoxx index up nearly 0.5%. FTSE up 1/4. DAX almost up half. The CAC up 0.2%. Asia Pacific overnight, actually not great. Actually down 3%, 2%, 1%, 2%. So no dramatic change. I think we read that, going back to the Bloomberg piece, I think it did say that US equity futures climbed and European stocks paid losses on Monday as the markets regained a measure of calm following jitters spurred by the Federal Reserve's surprise hawkishness. So basically, US futures are up, so you can expect Wall Street to open up unless something dramatic happens during the course of the day. We'll have a look at the dollar index. Yeah, marginally down, still well above the 92 level. Looking at oils, WTI crude is 72.01 and Brent crude 73.90, up just a few cents. So what's happening then in the gold and silver markets? Looking at gold, get rid of this. Looking at gold, gold is marginally up, as we can see. This was the close on Friday. They keep it up to Sunday, then Monday we've opened marginally higher. Let me just do the day chart. It is still quite early, obviously. The chart looks fantastic. Look at those highs, but then we have to realize we're talking about $18, but that's still very, very respectful, or respectable, I should say. So gold is up 1%, not surprising after the loss last week. And taking a look at silver, we can see, let's do the day channel, silver's trading at 26.04. Look at this chart today. Interesting. Rose, huge fall, and then massive recovery again. And silver is up 22 cents, just under 1%, lagging gold currently. Now, this is the irony in a way, because as we are coming out of an economic recession, providing, of course, we are coming out of an economic recession, we should really have seen silver outperforming gold, and that has not happened so far because, of course, on the back of demand for precious metals, silver has the advantage that, depending when, but anything between 40 and 50% is acquired for industrial purposes. And as we come out of a pandemic, closed economies, we should start to see that industrial demand rise, and therefore, even though precious metals may fall, silver theoretically should fall less, and as precious metals rise, it should rise more because it's got a monetary demand and it has an industrial component. But that's not happening currently, and we may have to take a closer look as to why that is not happening. That's it, basically. We said all that we mean to say, or meant to say, on the weekend. Just to give you an idea, on our channel, you can see the videos that we've produced over recent weeks, why the dollar is strengthening, causing gold and silver prices to fall, our weekly update. Then, did the Fed make a mistake causing equities, gold and silver to crash? Why did gold and silver collapse last week? Which is basically a repeat of our weekly update. And also yesterday, why dollar strength may only be temporary, allowing gold and silver prices to recover again. So these last 4 videos, last 5 actually, we've placed a link in the description box below, together with a video that did extraordinarily well, why gold and silver prices just crashed. Do have a look at that one. We'll put that actually at the top of the description box. It's well worth a listen, just in case you haven't had an opportunity to do so as yet. That's it for now. Thank you for listening. Please like, share, subscribe, press the bell sign, and give us a comment. How do you see this week going? There's virtually no US data being announced today, as we mentioned in our update. So we're expecting, I won't say a quiet day, but not as volatile day as perhaps we may have later in the week. Thank you once again. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.